A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duidari. Today is December the 10th, 2019, and I think you could say the markets are a little bit calm, waiting for, maybe the next financial storm. Maybe that's an overstatement, but maybe it isn't, because that's exactly what we're seeing here. We're seeing very, very, very calm movements, next to no movement, in fact. But remember, we have very, very big things coming up, and that especially tomorrow, starting with the FOMC on Wednesday, the ECB meeting, and the UK general election on Thursday, and the decision on the Chinese tariffs by Sunday. So you can see there's still a lot going on, and even though right now the markets are not reacting all too strong, we can still see that something will be coming. Now let's have a look a little bit at the overview here. Let's start with the dollar index, like I always like to do, in order to get an idea of the general dollar strength or weakness. And you can very clearly see on yesterday's movement that there was not much of a movement to begin with, and really that's the story of the day yesterday. And let's open up some other stuff here, for example the S&P 500, which will tell you a little bit of the same kind of story here. Which is why today's content in terms of our morning call is also a little bit less than usually. It's a wait and see approach. So you can see that yesterday we didn't really get any big movement. Let's look at on the daily here. So very, very little movement going on here, and not really something that you can expect a move from into, or expect to read a move from one side or another. Well, there was a little bit of headlines, like the U.S. Agriculture Secretary said that the next tranche of tariffs to China could be suspended, but that's really it. And there was added that the agriculture secretary said, "I do not believe those will be implemented, and I think we may see some backing away." That is Secretary Perdue, if I spell the name correctly. So we'll see what's going to happen here, but that's really it. There was nothing more that was delivered. On the data side, so if there's no fundamental news, then what did the data produce yesterday? And we can have a look at that. So here we go. That is December 10th. Now we want to look at yesterday already. Japan's GDP kicked off the day quite positively. I didn't touch on that in the morning yesterday because there was many other things to discuss, and but you can see that is maybe, and that could be an overstatement, one more sign of a possible turnaround in the global economy. We see that data out of Germany, imports, exports, everything has rebounded to some extent. The same happened out of China, if you recall, on the weekend, and which I can't see now here because it's only starting from yesterday, from the beginning of the week. And so all in all, you could say that there's a little bit of a global stabilization trend. Maybe that's, like I said, maybe this could be an overstatement, but nonetheless, it's something that markets are hanging on to. And really, what we're seeing is that after the central banks of the world were so accommodative for a full decade, basically, the first year they started to take away some of that stimulus already, put economies and markets in really bad situations. And what the takeaway from that big experiment, as they call it, is that the economy cannot exist without external stimulus, and it cannot sustain itself anymore. And that's quite interesting in terms of, like, where could the future of all this go. And it is very much less reliable than we like to think, even in my opinion. Because, really, very simply stated, we live in a world where the financial system is based on external stimulus, and as soon as that stimulus has been taken away, the economy cannot sustain itself. So it means that we're likely to never see higher interest rates again, and well, maybe can witness the that few interest rates that still exist, like in the U.S., like maybe also a little bit in Australia or in New Zealand, could in fact go away, and the outlook for that is not really a positive one. But with the amount of debt any country is carrying with it, any economies having as a burden, as a load, there's no room for higher interest rates. I mean, who is able to pay for these? So, okay, so even though everything is like very, very calm today, let's wait and see how things will develop. In the UK, let's look a little bit at currencies, speak of trading levels. Here's the euro dollar. We're still at the 110.60. Nothing really happened too much here. A little bit of a setback from the 1080 or almost 1080 back to the 1060. But you can see like yesterday's trend in Canada, very, 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 very small. And we remain to be technically here. If we a break below the 110.50 or a break above the 111 on a daily close is likely to inspire more movement in the same direction. On the downside, we have yeah, basically two support areas, the 110.50 and the 110, yeah, slightly below the 110.40. And on the upside, same kind of thing, a little bit above the 110.90, 95, and in fact the 111.20 up here. So those would be the levels I would watch for breakouts. And up until then, you can see very, very little or minute volatility awaiting what's going to happen with that ECB meeting, which is not too long from now anymore. It's 2 days and will be quite interesting. On the pound side of things, what we see is that the pound is still holding well. And yeah, we saw a little bit of setback yesterday, but not really. Again, if in the bigger picture, there's absolutely nothing. First down, then up again. And we're holding at that 131.60 area, pretty much so. The election polls still look positive here for Labor. If it will load for me, here we go. So nothing really changed too much from yesterday at all. This, by the way, is an interactive one, so that will update and give us the information as it comes in. But also here, things remain on track, which means the pound is also set to see further upside if that election result really comes to fruition, and it looks like it will. So that's something to look for. Yeah, but that is really about it. We have no news from the trade war or the tariff situation from a high level staff or anyone. We didn't hear anything from Donald Trump or Mnuchin or Lighthizer or from the Chinese side. Nothing at all. So it's very, very calm. The calmness before the storm, as they call it, is literally what is upon us right now. And we can see it like all across the board that there's hardly any movement. And here we go with the gold price, for example. Same thing. Like even if that looks like a bigger candle, we talk about a $2 move here, which is absolutely nothing in the bigger picture, as you can see here. So we are very much stuck at the moment in literally every market and need to get more news or more things to happen. Maybe today can play out like yesterday did, like with hardly any movement, but at latest tomorrow, we should see things start to pick up. Like I said, we have a number of things that are upon us and that are really likely to influence markets in a bigger fashion. With the ECB, for the ECB, the FOMC on Wednesday first, and then the ECB and the UK election, which is going to be a really crazy day for European currencies if you think about it. And obviously, what will happen between US and China? I mean, to me, it's odd that it's so silent, right? Nothing is moving. Like no news, no, like, are we getting these additional tariffs or are we getting along? That's the big question, and these are the questions that need to be answered, that need to be addressed before the market will take any new side. On the other hand, what we see is that, or actually, wait, before we go to the cryptos, one more thing, like talk about oil. Same thing, really, right? I mean, we saw that big post OPEC meeting move, which a lot of it was erased again, and we're back here at the 85 or 89 level, and the attempts to the 60 has been made and can actually continue to be made if we continue to see trickle in some data that is telling us, hey, the global economy seems to be getting a grip, and being becoming expansive again, because right now it's not. If anything, it's a little bit, tiny little bit stabilizing again, and that's it. And that's not enough for an increased oil demand. So if the demand doesn't increase, we're just gonna restrict the supply, and that's what they did on the OPEC, and it helped the price up. But that's it. I mean, it's not looking like the price is reacting too much more to that. So, looking at the calendar today, what we could also put some focus on is that CPI out of China came in, which came in a little bit softer here on the monthly. Not softer, on the contrary, actually more positive. And but I don't think that they're gonna look at increasing their interest rate by any time. Manufacturing out of the UK could be a little bit interesting. GDP obviously could be interesting. ZEW out of Germany, that is likely to influence the price of the euro to some extent, or the DAX. So depending on how far away, because recently it was very, very bad, right? And let's see if it's also seeing a little bit of a recovery. If it does, then chances are the DAX will hold on to its price, or even try to get push a little bit higher to the upside here. But apart from that, we have like non-farm productivity out of the US, so not tier one data as they call it. It's rather nothing like it's happening on a calendar either. So the likelihood for a day today that is a little bit less of dramatic or interesting is there. But look, training in many ways, the way I see it, you're a lot more a sniper than a stormtrooper, right? So you try to position yourself strategically in the right place. That's what a sniper does. You remain patient and attentive to the situation. You keep scanning, you keep looking, you keep not being impatient, or you're the calm guy, right? You're waiting for the right moment, or girl, doesn't need to be a guy, obviously. And then when the opportunity strikes, you are positioned in the right place, you have the right focus, and then you strike. And that's a lot more what trading is to me than just running with your just running around and trying to do whatever you have to do, because that's not really what trading is about. And right now we're in the positioning and waiting phase, and there sure is gonna be some target to shoot for in the coming days, looking at these big events coming. So and even if they don't, there's always a next opportunity. That's something you need to think about. Like, don't keep your powder dry for the right move. And right now it looks like there's not too much going on before these question marks, these big question marks, have been answered. In the land of crypto, however, things doesn't look so good. So yesterday we saw Bitcoin actually rather develop further downside pressure, and that's even though, like, in the bigger picture we're still somewhat in the trading range. But what is concerning to me is that whenever we reach these 7.6, maybe even before here, the 7.7 levels, the extent of sell-off is quite substantial and quick, and right now we're trading at 7,300, so we are still in the trading range. We have not broken to the downside, but this behavior, like this here or this here, is not necessarily giving me a good idea about any possible build-up momentum to the upside. On the contrary, it looks like whenever the price goes a little bit higher, sellers come into play and take control of the situation. And that's rather putting the outlook on the negative side here. So that's my overview of the market today. Granted, it's a little bit thinner than usually, but it is what it is, and that is normal. You know, it's fine. I don't mind with that at all. And we're very much looking forward to how this week is going to unfold. So thank you very much for listening in. I wish you a great, successful trading day. And yeah, maybe you have an idea, a market, a trade that you are thinking of. Then please use the comments, share with us, and we're very happy to discuss it together with you. So, thank you very much. See you tomorrow. Bye-bye.